Good afternoon, everyone, and welcome to the daily report for January 17th, 2020. We are TOSindicators.com, home of the Volatility Box. In today's video, we'll focus in on the Nasdaq, but let's first figure out why we're going to spend time looking at the Nasdaq. So here we have a chart of the S&P, the Nasdaq, the Dow, and then the Russell, and this yellow line on each of these charts is 7 a.m. Pacific. So what we're looking at is that first full hour that the indices have been open, so from 6 a.m. to 7 a.m. Pacific, and this includes that first 30 minutes of pre-market and that first 30 minutes of the actual market open. And we're now checking to see if in that period we breached either side's aggressive volatility box entry lines. That gives us some clues. It tells us that, okay, we're facing a little bit more volatility here. We're starting to make moves across each of these expected ranges early on in the day. And that also then it helps us figure out what kind of attention and focus to give certain markets over others, as well as what volatility models to use on each market. So our clues here on the S&P where we were well inside of that range, so use the aggressive models. Then we'll skip the Nasdaq for the time being. On the Dow, we had the same thing, right? Well inside of our ranges. Use the aggressive, look for opportunities. Same thing in the Russell. We did make a little bit more of a move in the Russell, but not quite enough. And so once again, use the aggressive. And then in the case of the Dow, we did make a move to our actual volatility box entry lines. And then we also bounced from there. We were looking for at least 16, 18 points, which is what this length is. And we got close to 24. That was your okay that it was okay to use the aggressive volatility box and that the Nasdaq might be the area of focus for the rest of the day just because we've seen greater than usual volatility in the Nasdaq. Now, as we progress through the rest of the day, the S&P didn't give us any entries besides this close. The Nasdaq did give you an opportunity to short. This isn't a valid entry for us because this is at really a Friday afternoon right at the close. But it's interesting to see that we did have an opportunity to fade the models here, and the price actually respected those models despite it being so late in the day on a Friday afternoon. Right, so that's something interesting to see. Then if we keep going down the line in the Dow, we didn't get close in the Dow, and then in the Russell, if we fast forward, we see that we only came to our actual target line and then bounced from there. Another interesting setup, and this was once again into our close, was in gold where we had a sell-off in gold, and then we had the stabilization, and then we had that first edge signal arrow plot. And this is that lagging indicator. It's purposely lagging, but it helps give us a confirmation on some of these markets like gold, like crude, like the 30 year, like copper. And it lets us get into these markets oftentimes at better prices. Right, and so once again, an interesting setup in gold. Of course, this is on a Friday afternoon, so another reason to skip. But if this was just a normal day and with an afternoon open, this might be a very interesting setup in which you're looking for the afternoon open to open up higher and then continue ripping up. And gold especially has been respecting our volatility box models, the conservative one in after hours as of recently. So for all of our volatility box members who have access to gold, this is something interesting to keep a lookout for. All right, hope you all have a wonderful long weekend. We do have our next tutorial video that we're working on, so keep a lookout for that, and we'll see you in the next daily update. Take care, everyone.